Hello there, good people of the YouTube. How are you all doing? I hope you're doing well. Beginning of a new week, very exciting week. Tomorrow we're gonna get CPI numbers, which can affect the market quite significantly. And just in preparation for that, real quick, I decided to do this coverage over the S&P 500, so everybody's gonna be clear on today's price action and where the market seems to be positioning itself towards tomorrow's CPI report. So on the 1 minute, not all that substantial. You can kind of see we've been moving alongside of this short-term, short-range trend. Pretty obvious that it has been retained and maintained quite well on an uptrend right now, kind of having some noise moving within the framework of this, probably for preparing for a change going to that upside, maybe even establishing that 60 to 170 on our way to close that gap. That leftover of nuisance we have all the way to 260, 280. That would be actually quite good for us, but let's see, get confirmation on the 5 minutes. 5 minutes, unfortunately, is contradictive. So 5 minutes basically is implying that if anything will be going downwards. So we are actually seeing pressure to meet this support on the shorter range of the price action. That's the longer price action duration that we just saw in the 1 minute. What is short on the five, long on the one, pretty simple. So, 5 minutes is also becoming more bearish, kind of giving us an indication of a continuation of the sort of wedge-like formation. So nothing all that substantial. We're kind of seeing price action that is not that indicative of anything that substantial. Again, as we're saying, that 62, 60 area. So again, nothing substantial. This, on the other hand, does provide us with potential upside, although being bullish in bearish territory. We all know what that means. That is this bullish price action that is basically it's a lot of bullish and nothing other than that, which means just noise. The market is going up and down within a framework, very narrow framework. In fact, we can suspect this wedge to be our potential culprit right there for the price action for the time being, more so kind of indicating what the true price action may look like. So let's remove all that crap just before I continue. So what we were just saying, potential again, moving within the framework of this sort of wedge. No one says we're going to stay for last this long, but at least this is the current indication with current sort of reading. As you can see, we're not having neither bullish nor bearish price action. That kind of moves us actually to the side via volatility that is just leads to nothing at the end of the day. Lots of up, lots of down, results with nothing. I can't even call this lots at this point. This is just very, very, very tame. Again, so we're bullish in bearish territory. You can see that very clearly right here. We're 19.50, 60 area on our K, on our D we're 14.287. Our D is basically our delayed moving average behind that K, that the green line, that represent bullish or bearish momentum. For the simplicity of things, right now, in fact, as you can see on this sort of structure, kind of plays along with what I was just saying. So we're more bearish than bullish. Again, playing along this, giving us this red candlestick that all it does still retains within the framework of this. All of this can change and very, very rapidly tomorrow, given the CPI report. And the CPI report will come in worse than expected. Of course, you may expect a redder day. If it comes in greener, you can expect a greener day. Well, actually, that came out very weird. So basically, if it comes in higher than we expect, if we're looking at the 2.7, 2.8, for example, right, instead of a 2.4, of course, the market will go downwards, right? The market will react to increasing inflation. Obviously, if on the other hand, we're getting a read that is lower than expected, maybe that will play alongside the sentiment and the narrative that things are not as bad as we think and things are going to be better and don't worry and the Fed are doing a great job and all sorts of excuses and basically continuing to drag alongside the price levels that we're right now and basically doing nothing, kind of keeping us within a very narrow framework of price action. All in all, what we would like to see, if anything, here is a closure of this gap. That 62.80 would be wonderful to see the closure of that gap. If anything, we're seeing more of an overturning of that bearish trend. We're becoming more and more bearish. As you can see, we're red dominant or bearish dominant right now, closing in on that 50 line. Although very slow, not with this super fast trend. We're kind of doing it very, very slow. The outcome of which, as you can see, we've basically been thrown around from one side to the other within the channel, within the trend, if you will. What it appears to be is a retest, usually within the larger framework of trends we have here. Another diagonal that is currently not on the screen, that is invisible basically, but what it does is it can be functional as a secondary ceiling, and as you can identify also, not also surprising if we're getting various sort of this junction of forces, the confluence of forces within a very narrow area of price range that basically starts to push the price action lower and lower. And as we can see, the momentum right now is far more bearish than bullish, at least on the daily time frame, moving closer to that 50 range. Once we cross over with both perimeters over the 50, we will then safely be able to say that we are in bear territory. We're still not there yet, but we're getting closer, which is probable to see some entanglement action right here, some confluence between the forces, and basically that will drag along the price action still and result in not much. Maybe will drag us lower back to that 6100, 6150, if you will. That's 6147.43. We have a variety of support and resistance levels right here, and then a confluence again of that channel median, which may pose a significant level actually for the price action to be retested. So let's not hurry up with any conclusions with that we're dropping, to 59, 58 yet, but it does seem to be that we're slowly overturning and the price action is becoming more bearish and more bearish with every day, with every session. Um, Tomorrow's CPI may play a significant role. Okay, right here on the weekly, what are we seeing? Are we bearish dominant, bullish dominant? What's going on? So we're actually bearish dominant, as you can see. So starting that flip over, that confluence of forces right here. The divergence at this point will already convert. We had convergence, now we're at divergence, and we're going to see whether the forces actually will diverge from each other, amplifying the strength of that bearish trend and movement was initiating right now. And so the next sessions, the following sessions, of course, will tell. But this is a telltale sign that things are becoming more and more bearish for the market, at least for our trend for the upcoming weeks. And since multitude of, well, just 4 weeks are a month, so in fact, potentially a multitude of months right here, we're looking at an overturning that may result in a significant downtrend right here. We've been waiting and talking about this for quite some time now in my community. By the way, shout out to the community real quick if I may bring the banner on the screen if I just can real quick. Join the community definitely. If you do want to inquire about my one-on-one tutoring academy, definitely do. It is still something that I have two spots for. I teach you all the technical tools, the trends, the structures, everything you need to know in order to become an independent analyst so you can analyze the market and your individual assets on your own. As you can see, it gives you various perks and many more things that I don't really have on the screen right now. It is what it is. I'm still working from my laptop. Those who know my PC is dismantled right now, and I'm kind of that's what I had prepared. So let's work with that. Um, Hopefully next video I'm also gonna have my camera on and everything as usual, or kind of as it is becoming usual now. So shout out to the community, to join the community, to join the Discord where everything is going on. Really, what you need to go to is like what was on the screen a minute ago, patreon.com/investory. Go there, sign up to whichever tier suits you, and then you'll be eligible and have the keys to the Discord, which is 100% private. That way you'll be able to be in the know, just like my community was, and preparing and knows what to do in such a situation. and knows what I'm doing exactly in my community. I share my position and all sorts of neat stuff. You'll see testimonials from previous students and all sorts of other good stuff as well that I'm forgetting to mention right now. Back to the market. What are we seeing on the monthly? The monthly, we are obviously bullish, right? Because this is a print of the recent price action that we've got in the recent months, although we're seeing a clear deceleration within the momentum, and we are hitting that 50 ceiling that, as I've warned, may play a role, a part in the process of the larger downtrend and may result in killing more time or burning more time, however you want to call it. Basically, the market makers make more money on these up and down movements, while all of us are, in essence, waiting for the next major step, a major catalytic step in the market, while they're prepared and running trades simultaneously. That's how they make money while sitting, it's like how they make mileage while sitting on the spot, so to speak. What are we seeing on our 3 months? Our quarterly is now right now still looking bullish since we haven't had yet that bearish momentum print into it yet. But once we'll see the printing of the bearish momentum from the smaller time frames and potential effects of inflation reports, whereas the CPI, PPI, and everything that we're up to see. And well, the market may react, very, very negatively, and subsequently leading to an acceleration of what we saw in the smaller time frames, leading to a very quick change of the structure right here. Because this is the 3 month, this is almost a leggy tool. It's not really leggy, just presents in such a way because the time frames and the periods themselves are very long, and by the time they're completely locked in, which we just recently locked in these candlesticks, the 3 months, the 3 months, the 6 months, obviously. So these will take some time to adjust. Although on the 6 months, we're already starting to see that curvature, that clear curvature towards the downside, which may become even more severe as our K bends inwards. Once the price action will become more bearish, this little leg may change its direction towards convergence right here with our D, moving toward closer to the 60 range or the stochastic RSI, implying a quick change in the turnover into bearish territory, which is something we've been preparing all along, and has to do with the cyclicality of the market, the harmonic patterns, and everything else that I teach in my academy in one-on-one sessions. That's it, boys and girls. This is all for today's update. We're basically waiting for tomorrow. Tomorrow is not necessarily indicative for anything and everything, as I've said just yesterday in one of the shorts. Of course, subscribe to the channel, ring the bell, make sure you change the notification bell to everything. That way you'll always be up to speed whenever I post, make a short, whatever. And as I was saying, tomorrow's CPI is not um, the only sort of thing that we're waiting for, really, if anything, it's not indicative of any changes yet in inflation. We want to see how the July report will come in on the 11th of August, and only then we will be able to tell whether this is more of a sticky situation and inflation is sticky. And we all understand that the Fed are basically stuck between a rock and a hard place, which I've spoken about in depth in my with my community members and various meetings we had, even made videos about it, talking about how the Fed cannot hike nor cut rates right now. They are basically stuck between a rock and a hard place. Whichever way they will go, they will affect negatively the retail, the average consumer, which in essence, the only way to solve the problem of higher prices are higher prices. And we've been dealing with this for quite a long time. And since the average US consumer is just buying more and more and more, and almost coming to this ceiling of whether it's a debt, whether it's savings, and basically their spending ability. And now with the big beautiful bill, the average consumer will have to spend a lot more on healthcare and other things that will other benefits that will be taken away from the average consumer, who will still have to have these things in their life and basically spend more money on them, subsequently leading to more less money to spend on stock market and various expenses that are sort of outside the basic basket of what the consumer buys. And yeah, things are not looking great. And I would still worry about oil prices, of course. By the way, maybe very important to mention how we are still seeing, for example, if we're looking in the 1 minute, it's a downtrend. I mean, Greg, what are you talking about? Right, that is the 1 minute chart time frame in comparison to what is going on, based in comparison to the previous session. If we're going to be a little bit more adults about it and more mature, we'll realize that our trend has been flattening and going flat for quite a long time with, of course, extreme deviation under conditions, which we know in 2022. Not going to mention all the outcome of basically coming out of 2020, 2019. You all know what I'm talking about. But if we're going to objectively look at the longer duration trend, it is an uptrend. Yes, we've been waiting to hit that bottom for some time now. And instead of doing it in this very quick succession, and a very quick trend, what we ended up doing is almost prolonging the process and stretching it out, which still has a lower bottom, roughly at around the 50 range, the 50 handle, 52, maybe even let's call it 50, because we can have slippage below here, leading still to a retest of these levels for a little bit, and then a um, breakout to the upside into the framework of the channel that we've been building up for some time now. So although people are unprepared, in fact, I'm preparing to make a separate video talking about oil. How high can oil get individually? It is also something that people such as Jamie Dimon, JP Morgan's Jamie Dimon was talking about a while back. And again, Jamie is not one of those Captain Obviouses who's going to talk about what is already happening in the market and you have your own eyes to see. He's going to talk about things that are predictive far in advance. He's going to talk about things that may happen in the further future, and the average sort of retail consumer trader want to be attentive to retail investor, if you want to call it that, because at the end of the day, these are just terminologies that are being completely abused. Join the community and you'll know all about it. I have many rants about various topics that are being done wrong in the industry. That's it. That's it for today, boys and girls. Again, quick shout out for the Discord community, for all the members. Going through some really good and bad times recently. All of you boys and girls are more than welcome to join the community and learn all about the technical tools that we use, that we talk about, the various patterns, the various conditions. Um, Basically everything and anything that relates to that technical analysis skill. Join the community, join via patreon.com/investor. Then you'll have access to the Discord, and you'll get to access all the various perks I mentioned before, 2 meetings a week, and more and more and more stuff that is up to come, and more stuff that is already there. So yeah, definitely join that. Ad-free content, all sorts of cool stuff. I can talk about it for days on end. Shout out to my admins, and well, not just to my admins, to the admins in the community, absolute legends, continuously improving and helping me maintain the community and keeping it a beautiful, supportive place that harbors great knowledge and wisdom. Love you all. See you on the next one, or in the community on the Discord. Bye for now.